Good day, everyone. Well, we have a market that seems to be continuing its uptrend despite the S&P has been sideways for the last few days, and the NASDAQ is just peeking into new high territory. But what's important here is the action of the leaders continues to be appropriate for healthy markets, and we've seen a number of leading names that seem to be holding their ground and continuing their uptrends. So really it's not a whole lot to say here except stay the course. Interestingly, we have on the precious metal side and the commodity side, it looks like important lows were put in. On the Commodity Research Bureau, that would have been early this year, and it's been in a pretty good uptrend since then. And then we have gold, who had a nice breakout through, well, not really a breakout, but a burst through its 200-day and 50-day moving averages. And since it's been going sideways in a tight and fairly constructive manner, if people are interested in putting a little bit of their portfolio into this on the basis of fundamentals, that's probably not a bad idea. However, I prefer myself to portion my money into what I believe is going to be has offered the greatest time value. And keep in mind that gold is still in the middle of a basing pattern, so it's not going to just get up and go from here. It's probably going to go back and forth, backing and filling for a while as it rounds out its base. So you know, personally, I've got my money in either stocks or volatility ETFs. That's been working quite well. And as I said earlier in other webinars, you can trade around the core position in some of these volatility ETFs, and you can do quite well. One of my core positions I've been holding for a number of months, and that thing is up something like 60-some% now.
What is that, Dr. K?
SVXY. And you could do that one. You could do XIV. I trade XIV sometimes, but yeah, there's a lot of these vehicles that you know, ZIV is another one that are conducive to longer-term holds around a core position. Or you could also do a shorting of things like UVXY, VXX, and so on. But I personally prefer to buy rather than short. It's just my personal preference. And yeah, the thing with shorting is that first of all, you have to get to borrow, and there might also be a lending fee, interest fee associated with that borrow. So I just keep it clean, and I prefer using vehicles like SVXY and XIV. But with that said, I mean, there's not a whole lot more to say about this market, except it seems to be doing pretty well, and you know, I'm just staying the course with some of these positions. I'm most interested in names that, you know, as always, have a very interesting story associated. So those would be names, obviously, things like Tesla, back when it had a huge Bible gap up and then had a huge fierce run to the upside. I'm still interested in the name, and if you're sitting on a position there, it's not doing anything wrong. So maybe it's you know, going to finish its base and then break to new highs. And then GWPH is another one that's caught my attention. I've been sitting in this one for since the buy point. And I like the story behind it because of the medicinal effects of CBD, which the neuroreceptive effects of CBD are quite proven in laboratory settings, and so it's good that the world is finally waking up and saying, okay, yeah, let's not, well, I'd say, you know, right now this company is using it for the treatment of cancer pain and MS and various other diseases, but I think this is the first step toward other companies, or maybe this one, starting to use it for the general population, you know, for overall mental optimization. And again, there's a lot of studies that have been being conducted on CBD. It's tarnished just because it's associated with THC. THC has some issues if you're just doing that in abundant quantities, but CBD seems to be the winner here, and the fact that they can isolate it and then use it for human consumption, I think, bodes very well for the drug. Gil?
Yeah, it does actually. I've been reading up on the CBD, and it has a relaxing effect apparently, and they even have done studies of people who do presentations, I guess, in front of groups of people. And you know, a lot of people, when you get in front of a room of a couple hundred people, when you do it for the first couple of times, you're pretty nervous. But they give the CBD to people, and they seem to be able to concentrate just well, and they lose their stage fright.
Yeah, I
So
remember that first presentation you and I gave for Bill. And I
way
don't think we
back
slept
in
much
what,
the night
90?
before.
Was it
90,
what,
98,
98? Yeah.
99, something like that.
Yeah, I
And
was pretty nervous.
we didn't have any training or anything, and I remember went up with fully written out cue cards because I didn't want to lose my train of thought.
Right.
And that was a great experience because it taught me that, well, what happened was at the end, the Q&A, I didn't, of course you don't have cue cards for that, and I found that was
That's your favorite part.
came just natural to me, and I just enjoyed it. I relished it. In fact, stayed an hour later to continue the FAQ
Stay like
session.
for 5 hours after the
Yeah, actually, it was. There was one where I was out
drag
until
you
about
away to get to the bar.
10:30 at night.
Anyways, all that's to say is if we had had CBD back then, Dr. K, we could have just, smoked 2 joints before the seminar and whatnot. Anyways, we're off on a tangent here. Why? Because, I think in many cases you're sitting here maybe not thinking so much. I've done a little bit of, quote, thinking, gone long the UVXY in a couple of these days where the market has sold off, and those actually were profitable trades. And I'll just do that just to kind of settle myself down. It's kind of like what I call the CBD trade. It just kind of mellows me out because I've got this UVXY position. And, UVXY or being long the VIX when the market comes off, it's like Brill cream. Anybody remember Brill cream? I know I'm dating myself, but my mom used to put that stuff in my hair when I was a little kid, I remember. And the motto for Brill cream was a little dab will do ya. And I think that's the way if you go long the VIX, so you got some long positions, and you got a little VIX there, it's helping on a market pullback. I think for the most part, the pullbacks have been constructive. You can see every time you try to come off, except for Tuesday, and everybody's trying to make a big deal out of Tuesday. I noticed the last couple of days on the financial media, people have been focusing on this issue of Tuesday being a key reversal day. And I somehow, I guess, when the whole world sees something as a key reversal day, now that everybody has charts and everybody has technical analysis 101 under their belts, and basically just prove that a little knowledge in the stock market can be a dangerous thing. It's just one day, and I can tell you that I remember even in the big blitz at the end of 1999, you had a couple of sharp pullback days, as I recall, Dr. K, and it's in a way these are good because it helps to shake weak hands out on the way up, and so it feels like that's what's going on here. And if you're making some progress with some names while the market's backing and filling, then I think that just reinforces the whole bullish argument. But it is interesting on Twitter, I'm getting some people tweeting at me theories about why they want to be bearish here. An example would be, let's take a candlestick chart, shift this to a daily, and let's just look at like the NASDAQ. So what they see is this one day here. You see that? That's supposedly is a hanging man, which is supposedly a bearish pattern. But again, it's one day, and of course this was a hanging man right here, but the market continued higher. This is another hanging man here, but the market continued higher. So what I think is really interesting is that these bozos out there who think they just read a book on candlestick charting, and they run around talking about a pattern that if you look at this uptrend, when this has shown up, in fact, in the uptrend de facto, just look at what it's done, the market's gone higher. So it doesn't it has zero predictive value in this market, and maybe a lot of other things do too. So what do you have to rely on? Well, it's very simple. You just watch leading stocks, and what are they doing? They're acting fine. And you're seeing a lot of stuff coming to life here. A lot of bottom fishing pocket pivots, which I think on the good roundabout type formations, those are great entry points because you're in long before everybody else sees the stock has built a, quote, proper base and are now piling into it. And so I think the contrarian aspect of buying those types of buy points is the way to go. And I think like something like Twitter. You guys on the chat room, we've been playing this one since just around the 30 level in here, and the stock's continuing higher. I'm still long the stock, and it's up over what 25% or so, and you're getting more pocket pivots. You had another one on Wednesday. And where I would make an exception with Twitter, it's deep down in its pattern, but it's one of those stocks that can capture people's imagination. I also was listening to Mark Andreessen, who runs a venture capital firm now. Some of you probably remember he's the founder of Netscape, I believe. Is that right, Dr. K? So Mark Andreessen founded Netscape, right?
That's right.
Yeah, and he was just kind of discussing the investment that they have in the company, and he's a venture capitalist, and if venture capitalists think that the best they're going to do is dump something once it comes public, they'll do it. And in this case, he said they're holding their position because they think the long-term picture for something like Twitter is very positive. So until they see something different, they're holders of the stock. So you do have some strong hands in there, but I think on the way up, every once in a while, you will see it get hit with some volume because you'll have a block of stock coming out. If you look at the 5-day chart, I just talk about this because I get a lot of questions about Twitter all the time. This morning they come in and hammer the stock, and then they wash it out. So see, if I'm short a stock and I get a long bar like that on the 5-minute, I'll generally cover into that. Today was a good time to actually get long into that if you were looking to buy the stock on a pullback, and then you could have been a little bit ahead of this 620 buy, which is a little choppy because Twitter is a choppy stock. And for all I know, they may come back in and hit it going into the later on in the day at some point. I think it was the day before yesterday. Yeah, they hit the stock right around 11:45 my time. Suddenly hit the stock with a big pile of stock here. Probably insiders losing stock, which to me makes perfect sense because, if you've been working for the company for a while, bad economy. Well, maybe not if you're working for Twitter, I suppose, but you're going to want to take some off the table. And there's a lot of people who have stock because of the amount that came off a lockup. So you have to expect it's going to come in from time to time, but it seems to be getting absorbed. So I think stock goes higher. In the meantime, the big leader is Facebook, and it just keeps trundling higher. LinkedIn is trying to set up again. It's a little slower. I don't really like this. It's a bottom fishing play. I like the Twitter, and I like the Facebook. I also like Yelp. Looks good. Pushing up. Very, very similar in terms of what it's done over the last couple of weeks. Similar to Tesla, which also looks okay. And trying to go higher. But Yelp is is trying to move up through here, running into some resistance. But you can see it's coming from this side, so right up here. So we'll see how it works its way through it. But they run it up a buck or so this morning. It comes in. I don't really see that as an issue. I've played Yelp many times, both long and short, and I can tell you it's a very, very squirrely stock. But once you're going with the trend one way or the other, that's generally the way to continue until you see evidence to the contrary. And right now it's just pulling back to the 10-day, and I think volume is light here. Let's take a look. Yeah, you're running about 45% below average, so it's kind of voodoo type volume dry up thing going on here. So anyways, Palo Alto Networks, still, it's up at the right side of this cup. This is a double bottom. You had the breakout here in the middle. The midpoint is your buy point rather, and you had the gap up through there, which was buyable. And then you continued higher. Now this thing's kind of building a handle up here. You had a pocket pivot yesterday, but I also think you had a pocket pivot on Wednesday. Stock closed 8 cents below its 10-day moving average. If you've traded Palo Alto Networks or you own it, you know that stock can swing around a lot. A lot of times the spread, can be as much as 15 cents. So to me, if it's within the spread that I'm seeing in the stock generally at the time, within that spread of the 10-day moving average, and you see that volume, I think it's a pocket pivot. So I think the stock is revving up to go higher. It's just a matter of when the market comes loose from this consolidation it's in. And we were talking about in our pre-market pulse a couple of days ago, right, Dr. K, about how you've seen the market when the index is, the NASDAQ gets 5 or 6% beyond the 50-day moving average, it will slow down and let the 50-day catch up to it, or it might pull back into it. So that's usually a point where the market slows down a bit. Now let's see if it breaks that pattern. But that pattern is held for how long, Dr. K?
Well, I think it's been good for like at least a couple of years now, if not longer.
Yeah,
So, we've got this uptrend that has a natural rhythm to it, but it also has a fairly tight bandwidth to this uptrend. So, yeah, because of that tight uptrend, it almost becomes predictable that should the market get ahead of itself by more than 5 or 6% above the 50-day, that could be the signal that, well, so far that hasn't been the signal that the market's now going to take a breather. Doesn't mean it has to always pull in. Sometimes it will actually go sideways and tight. But right now it looks to me like actually, where are we right now? The market's at 43.86, and the 50-day is at 42.08 roughly, and so that's 4.2% above.
right.
Earlier it was just over 5%. I think that was on June 24th. At the peak, it was about 5.1% above the 50 days. So then it's rested for the last couple of days, so it looks like it can now go again.
Right, and that 50-day is starting to catch up. So the key thing, I think, is when you reach this point on the upper end of the band that Dr. K is talking about, what you need to do is watch and see how leading stocks are acting. And if leading stocks, I've noticed when that happens and you start seeing some leading stocks getting shellacked or breaking down, that's usually a sign that it's going to come in. What we're seeing in here is leading stocks moving higher, and more breakouts and more pocket pivots and all of that. I think speaks to the market's desire or impetus to go higher. So, yeah, so I think you got to be on the long side. And if you're over there, trying to do stupid things like call a hanging man top on the NASDAQ, I think you're just kind of like, I don't know, you're just kind of overdoing it. A question someone asked, Dr. K, is can you explain what it means to trade around a core position?
Sure. It just means that let's say your normal position size is 25% of your portfolio. Well, your core position may be just 10% or 15%. So in other words, you can take profits and reduce your 25% holding down to 15%, and then perhaps buy it back and top it back up to 25%. But you're always holding on to that 15% core. So in other words, even if you're wrong on a sell of anything above 15%, you still have that 15% core position. And that's worked well for me in terms of something like SPXY, which can be fairly volatile. But by holding on to core, I still have my core position all these months.
Yeah, for me it's basically because I take such concentrated positions, I'll tend to hold less concentrated positions overnight, and I will use excuse me, I will use intraday buying power to come after my favorite stocks if they're pulling back on that day. So right now my heaviest positions are Palo Alto Networks, Yelp, and Twitter, and they weren't this morning. They were all pretty much roughly even. I'm running about 30% each, I guess, somewhere. I'm going to say between 20 and 40% each. That would be a core position for all of these. Right now I own 6 stocks, so that can change very quickly, so don't get hung up on it. Especially if you think because I own 6 stocks, you need to own 6 stocks, which is not the case. But what happens is I'll come in with a core position, and if I have a core position that gaps up, that's great. I just let it go, and it keeps moving, and then I'll find a spot where I want to add back or get heavy. But usually what I do is on an intraday basis, I come in heavy. So example would be Palo Alto Networks. It's at a standard position overnight, and then as it comes down this morning right after the opening, you get a 620 buy right here. So here I come in real heavy, and I turn it into a big position, maybe 60, 70% or more on an intraday basis. And if it closes up sharply, I may hold, I may build the core position from, say, 30 to 40%. And leave it there, and I'm slowly getting more on margin in terms of core positions, but at the same time I'm moving up with my profit cushion in the stock, and that's how I trade around core positions. So I use intraday buying power. I go in real heavy. The other one would be Twitter. Like I was saying this morning, watching it come in, and I already have this idea in my head that, and it's a fact because the stock came off lockup. How many shares came off lockup, Dr. K? Do you remember?
I don't remember on Twitter.
But it's like,
Um,
was it 250 million, 350? I mean, it's some ridiculous.
it was. I mean, they had that day where it was 134 million shares traded.
Right. So a lot of it, I think, has been washed
It could have
out.
been 200. It could have been quite a bit more than that.
I think, yeah, and it was. I think it was a couple of hundred million at least. And so on that first day, though, when it came out, there was a fair bit of volume traded. So they're washing it out. But I think on the way up, you're going to run into periods where they're going to want to cross a block. And I was talking about this yesterday on the chat room. Back when I worked at O'Neill, I was the head of the institutional services group. I used to go out and visit the guys on the New York Stock Exchange floor. We had 2 seats back then. O'Neill owned one, and we leased the second one. Dr. K, you used to come with me all the time. That would be a blast. Actually, you recall those days. But
Yeah, those were special days. Those are fun.
one day, one of our traders, Louis Solcente, who sometimes you'll still see him. He works for another firm now. He got ignominiously fired as well with a lot of people at O'Neill a few years ago when everything went electronic. But he's working for another firm now. You'll see him on TV. But one day I asked him to leave me with one of the specialists and just pretend that there's some dumb Joe off the street. I apologize to anybody named Joe, but some dumb Joe off the street, who just wants to see how the market works and stuff. So I'd stay with the specialist, and I'm trying to remember what stock it was, which I'm amazed I can't. But anyways, it was very interesting because you have people come to them with a big block of stocks. So while we're there, somebody came with like 1 million shares of this thing they wanted to sell. And so what the guy does, he's like, yeah, okay, I'll take it from you, because I think the overall trend of the stock was up. And so he drops it 3/4 really fast, and then he takes the block, and then he turns the thing around, and it starts trading back up. So I figure if you're going to see the selling come in from time to time, and somebody comes in with a block, say, of Twitter, they're going to take it down, they're going to fill it, and they're going to turn it back to the upside. And so that's what you've seen today so far. So my theory is correct there. But I remember watching this guy do it, and he had a little laptop, and he was keeping track of his P&L. Okay, now, the romantic version of the specialist is that he's facilitating a liquid market and matching buyers and sellers. But the bottom line is that guy's in there every day. He works for a firm that owns that seat, and they want to make money with that seat by moving stock, by moving merchandise, taking the bid and selling the offer. And the bigger the gap between those that they can engineer, the better. So that's what they do. And so if you understand this, you can kind of see how this thing trades. We saw the same thing with Yelp. They dropped it down way below 76 yesterday, and they crossed a big block of stock, and then it turned back to the upside. And we were watching it actually while I was in the chat room. In any case, that's what happens. And so you see this big streak, I come in and I'll buy the stock. Now you're kind of hanging out here trying to decide if I want to get really uber aggressive, but I think I'll hang for now and just let it kind of sort itself out. Now here's Yelp, same thing. Yelp's a big position now because you came in, and now you're turning off the lows. Here, in this case, what you have here is the MACD stretch, but on the washout here, there's the MACD is actually positive, and there's not a lot of volume, so it looks like it's a retest, and you can try and come in there and load up. And now here we are turning, so I think you can see the stock took off in the morning and then came right back in. So, this is how I'll work around core positions. Very aggressive, but it's how I do it. And I'll come in a lot and very fast. So it's a lot of trading activity. My accountant hates my guts because I bring in like a stack of paper 2 feet high for my trading run every day, my trading blotter. So anyways, just something to, hopefully you guys found that helpful in understanding how some of this works. But if a stock's in a downtrend and you see big blocks coming out, that's not a good sign, okay? If you're seeing the big blocks getting executed counter to the trend, that's the time to take notice, okay? And that's a general rule that I abide by based on my experiences hanging out with specialists. Anyways, let's see. Let's look at enables. People are asking some questions I want to answer, get through some of them. This one's acting okay. It's just in a base. I don't know. I can't get excited about it. I think, what was the one that we put on as a pocket pivot right off the lows of the base and it blasted off? Dr. K, what was that one? G-Log? Same business, I believe. But this one, we had the pocket pivot here. I prefer this one. It's really a leader. Let's see. Is Spickley going to be spokesmodel for GWPH? I don't know what that means. Grubhub. Oh, yeah. This thing got hit the other day. It was starting to have a pocket pivot. It actually did have a pocket pivot, but a crazy one. Closed above the 10-day, held the 50-day on the pullback. Very volatile day. But the reason that happened is there was news that came out in the middle of the day that Amazon was coming out with a service to compete with Grubhub. So, and I think that also has an effect on Yelp. I don't know, but whatever. You know, Amazon also came out with a phone the other day. Big deal. That thing, to me, that thing's a dud. Have you checked that thing out? Anybody check that thing out? I think it's a piece of junk. Anyways, SLXP, someone's asking about, just had a breakout. It's holding tight. You know, nothing else. Wait for the 10-day to catch up to it, see if you get a pocket pivot off of that. WWAV, White Wave Foods. You see anything here that thrills you, Dr. K?
Not particularly. Let me just check the fundamentals and the storyline. Yeah, I mean, it's not that exciting a group. No, I mean, it's pretty slow. Well, it had the gap up on the earnings. I mean, it's not doing anything wrong on a technical basis. It looks all right. The earnings and sales are accelerating. Institutional sponsorship is up and down. Group ranks 53. It's okay. I mean, it doesn't really get me going so much. But there's nothing wrong with it. So like we always say, we don't have to bless every stock. If this one suits your risk tolerance profiles, there's nothing wrong with buying it.
Right. It's very slow, but it's very slow. It's a food stock.
Yeah.
They make
especially in this kind of market where you want to be in the faster names.
Right. So it's a slower name. So it's not something I would deal with. It doesn't look. It's not like it looks bad or anything. Illumina is just building a handle. You can see the cup and handle. So the buy point was down here. We were on that. So you get to buy it there. And this is what I'm talking about. If you're buying these sorts of points, I think you're in good shape here, and you can afford to kind of hang out and see how things develop and sit with some positions and maybe think less, sit more, unless you're me. Let's see, BAC, Bank of America. I'm not really into Bank of America, and I'm not sure I'd even short it. I've noticed some banks are doing okay. Wells Fargo is doing okay. UBS, look at Dr. UBS, USB, forget UBS. USB building a cup with handle. Schwab, look at Schwab. Had a big pocket pivot here. Looks like it's trying to go higher. What are the other banks out there, Dr. K? I guess let's look at the XLF. That's what the XLF looks like. So anything in the financial area that doesn't have a strong-looking pattern like the XLF is a laggard, and BAC would count. But I don't know if I'd be shorting. I don't think I'd be shorting anything unless I was just shorting it as a day trade. I came in and hit Amazon a couple of times short on day trades, but that's it. They're tactical. They're day trades. I know I can do them on pullbacks. I can find it to weak stocks, but a lot of these things will turn around on you and head higher as long as the market trend is up. So if you're doing it, it's a quick hit, and I don't think you want to be shorting anything. I know somebody on the chat room was talking about shorting VIPs right here, which, I don't know, I guess they have a crystal ball, and they could tell it was going to break down. But it's right on top of the base, so it looks like I would be more inclined to buy it there. But if you did short it here and you got $3 or $4 on the downside, you probably just take it. Same thing with Amazon, because the short side just isn't working. I'll just test the short side to see if there's any real traction there. And off the peak, when we've had the indexes 4 to 5%, 6% beyond the 50-day on the Nasdaq, and you do hit something short, I've noticed they'll tend to work. So you'll get some positive feedback on that. And I'm not getting it right now. Anytime I put something out short, it's a short-term quick hit, and if I'm not quick on it, I can end up losing money. Somebody says, based on Gil's comments on his 3 positions, it sounds like he put them on today in his day trading. No, I didn't put them on. I'm not sure how you come to that conclusion. And then he says something, I think he mentioned not holding positions overnight. No, I said that's how I work core positions. So are your stock recommendations ones that we can buy in a pocket pivot and hold for days, weeks, or months as long as the trend holds? It's all depends on your style. My style is to be very aggressive, so I buy the pocket pivots, stick with a core position, and trade it big around the outside. I didn't say that I necessarily day trade them. So it helps to pay attention, though, I would have to say, instead of trying to overanalyze whatever we're saying. A buy point is a buy point. How you choose to use it is up to you. In some cases, it can mark the start of a big trend, depending on what the general market does. And often, big trends do start with pocket pivots. And in some cases, it can turn into a shorter-term trade, depending on what the stock does and how volatile it is. So my objective as a trader, and I trade my own style. I'm not an O'Neill robot who buys breakouts only, and they have to fit all the CAN-SLIM characteristics. Some of the biggest leaders we've seen over the last year have been in stocks that don't fit the classic CAN-SLIM characteristics. But as Dr. K and I wrote in an article in TraderPlanet.com a couple of months ago, CAN-SLIM is dead. If you're sticking to CAN-SLIM, you're just another goofball robot, who's been told that these certain characteristics work all the time, which is not necessarily the case. And in my view, investing is always an optimization problem. And the systems evolve depending on the market environment. So pocket pivot is a buy point that has evolved as a result of the market environment. It's not something that O'Neill talks about. So, I think it's interesting that people try to hold us to some sort of idea that we adhere strictly to O'Neill principles when we use a buy point that they refuse to acknowledge. Right, Dr. K? I mean, I find that that's kind of comical. So, I think any of these buy points can result in longer-term trends. It depends on how you want to play them. So we're not saying our buy points are good for any specific type of trading. So they're buy points. How you use them is up to you. So Cavium, this is a little disappointing. In my view, it should have held up better. But you have the Bible gap up and it held and came all the way back. Dr. K, do you have anything to say about this? Is there anything that strikes you here in terms of it being kind of weak, or is this a pullback that you can buy into?
Well, if it's your style to like to buy on weakness on pullbacks, as it gets close to the 50-day,
then it's there.
You could maybe take add to a little position here. But my style is to wait for it to get traction, and I like pocket pivots because you're buying into strength instead. But that's just my style. Everyone's got to find their style. Right now, the stock looks more or less, it's holding up okay.
On the weekly,
so, if you have a position, there's no reason to sell it here. And overall, the fundamentals look good. It looks like it's doing pretty well. So the question is, if I were to add to my position, I would wait for another pocket pivot.
Yeah. So, but to me, I had it and I sold it. I figured it had to start moving up off the 10-day, and when it couldn't hold in there, I just kind of took that off and went to something else that's moving. So, Organovo, the stock it's coming back from the grave yet again. It's a bottom fishing play here. You got this gap up here. Did you put an alert out on this, Dr. K?
Yes, I believe I did with some caveats. Yes, I did in the pre-market pulse. I mentioned the stock, but also that it's going to be a bit volatile because it is a thinner name. And just the way it's traded, its trading history is very volatile. So just to be careful with it.
I don't know. I think I'd rather own GW. Let's see, AKRX. Acorn, you had a pocket pivot here, and it's just continuing higher. It's not much else. Any thoughts on WUBA? Well, if you were on the chat room on June the 9th, which was this day right here, I was telling everybody it's hitting my voodoo screen, and it's probably a buy right there, and it was, and it took off, and then it comes back in. That's to me a normal pullback. You got some overhead from the left side, and you're out of there once again. And now you're coming up the right side, but it's way extended, so it's not like you're going to buy it here. Twitter's trying to push back up over 41. We're at 40.99. Here we go. Offer at 41. See if they punch it through. Palo Alto Networks also, you may have noticed, has hit resistance around 82. So I'm just watching that as a key level. That is one of my favorite stocks, though, in this market. I like the solars also have acted very well. Spewer being my big solar position, and if you guys remember in the webinar, I was talking about buying it in here. So, but oh no, you can't buy it there because CAN-SLIM says you can't, Dr. K. you can't buy here on the pocket pivot, and you can't buy here on the Bible gap up. I don't know.
Well, we know Cancelim is a retail product. It keeps things very simple, or simpler, shall I say.
Yeah, I think it's a simple system for simple minds. How's that? And I think a lot of people get chopped up with it these days. I get a lot of complaints from people. If you take 10 people using the system and they're relatively new at it, I think half of them get chopped up, the other half make some money, because it's really not a panacea. There's a lot of hard work, a lot of thinking through, a lot of understanding your own trading psychology and how you're going to approach the buy signals that show up and how you're going to handle them. We used to say when we were at O'Neill, and it's true today, it's not necessarily buying the stocks themselves. Any bozo can find a buy point. We do it all the time, right? It's how you handle them once you've bought them, and so that's a big difference. So go ahead, Dr. K.
Cancelim was not working at all post 2003 when the markets were compressed sideways, uptrending markets, but they were compressed compared to the way they were in the 90s, the 80s, and the 90s. So
Right.
that really was what got me quite frustrated enough to start looking at bases in different ways. The base breakouts just weren't working, and I kept getting chopped up again and again. And so that was the birth of the pocket pivot, and then
Right.
and then the Bible gap up.
But Dr. K, Bill O'Neill doesn't endorse pocket pivots. I say all the better myself. Anyways.
Yeah, everyone's got their system, and sometimes maybe age works against you. I keep reminding myself that we've been doing this a long time, and I don't want to get into one of those mindsets where I think that what I've got can't be improved on.
Yeah, and so anyways, so our objective has been to push the envelope on this system. I think O'Neill's systems are basically an offshoot of Livermore and Wyckoff. If you've read stuff about Livermore and Wyckoff, I mean, Wyckoff even has their red dress, blue dress, or yellow dress story as well about stocks that he tells in a little pamphlet. I think it's actually a pamphlet on day trading that he wrote way back in the 1920s or 30s. I don't know, but I think a lot. There's
a bunch of his books, so yeah, it's right about that.
So to me, O'Neill represents more of a general body of thought, one branch of a general body of thought that's rooted in Livermorian, shall we say, and Wyckofian principles that were established early in the 1900s, and I think that also leaves room for the system to develop with the markets. For example, in Livermore's day, the institutional sponsorship were the big pools, the big operators, the big pools, and the banks and the trusts, and because they knew what was going on, and insider trading back then was not illegal, and you could see what's going on the tape very easily and go with the trend when you saw it. So his institutional sponsorship back then were these trusts and these pools. Mainly the pools were big movers, and in O'Neill's day, the institutional sponsorship has been mutual funds, the hedge funds, and pension funds. So so the systems, the roots, I think, the foundations are similar, and I think that pocket pivots, Bible gap ups are all rooted in the same Livermorian foundations. Where is the line of least resistance broken? And that's what you're trying to find, and there are many ways in which that materializes. Pocket pivots, Bible gap ups, and other sort of tricky buy points also are based on that. So that's how I look at it myself. Let's see. Dr. K. Gil, would you go to earnings with the core positions? I'm not sure. Depends, how much of a cushion I have in them. How about you, Dr. K?
Yeah, it's all contextual to, it's just in context with many different variables. So, you can answer that question 100 different ways.
Somebody says VET and 3D stocks are doing well. And they're coming up to I don't know what you mean by VET stocks, but 3D stocks are coming up off their lows. You have, I think Stratasys is probably the leader, and I do think we pointed out a pocket pivot and one. Now let's see. Yeah, I think there was one here, just barely.
Well, there was one, but it didn't clear the 200-day.
So you're below there.
There was actually one. There was one on the 17th, but it's not ideal.
Yeah, but they're trying to go higher. But see, that's just telling you what's going on in the market. Everything's trying to go higher. So you have to decide what you think has the wherewithal to carry a lot higher. And I would say if you can catch a bottom fishing a roundabout type pocket pivot in a name, as was proven with Illumina back in mid-May, so far it's done very well. And you can catch these things and get an early start. And we talked about this a couple of weeks ago. How do you distinguish how one might be stronger than the other? You can look at things like how deep is the base. Is it a normal depth, 30%, say? The less deep it is, probably the more positive it is. But on the other hand, if they're deep bases, they can have some pretty sharp upside moves, as we've seen with Netflix. Here was the pocket pivot right there. I mean, this has all the characteristics of a pod sort of formation. You go 1, 2, 3, 4, 5, I'm going to say 6, 7 weeks, 8 weeks to the downside, and then another 8 back up. But look at how that thing has come up. And so, but Netflix is a big stock name, and I think that's really the key. There is you have to decide: are these big stock names? Are they in businesses that right now are pretty much pushing the edge or the envelope rather in their respective industries, and with what's going on out there in the economy in general. VJet, somebody's asking about VJet. Yeah, that's another one. They're all moving back up. So I bet you X1 is probably doing the same thing. Yeah, and so they're all doing it together. So maybe they are going to come back and set up. If you try to buy some of these bottom fishing pocket pivots, you've been successful. So that's all you know there, right? Someone says I tend to sell before earnings and buy it back if it goes up afterwards. I think. I've been thinking about how I'm going to approach the coming earnings season, which really moves into full force in July in the next couple of weeks. And if I've got a 30-40% position in a stock, I may hold a core position in it. If I'm not a 30-40% position. I mean a 30 to 40% profit in it, and I've been working it pretty well and maximizing that. Then I might elect to hold. So especially if I think the stock has potential to surprise. I think the solar industry has potential to surprise. I think that is starting to become more of a mainstream sort of thing. You had the deal the other day with SunPower announcing a partnership with KB Home, and I think they're doing that now with other builders, such that it's becoming standard installation in a lot of places. So, if that happens, I think that's good for their long-term growth. And Dr. K has also pointed out, that they have strong technology, and we've talked about the fact that they have international exposure, and there are other countries that probably are looking to emphasize solar, like India. So I think there may be some possibilities there. Diodes had the pocket pivot here. We talked about that, or you put an alert out on that. Now it's pulled back to the top of the base. So if you like the stock, go for it, I guess. Not really what I consider a big stock leader. So I kind of look something at like SunPower, Palo Alto Networks, big stock leaders. Ruckus, nothing there that I like. You see anything you like here, Dr. K? Ruckus Wireless. I love the name though.
Yeah, I remember this. Looking at it before, and it's it's just such a bottom feeder that it doesn't have my interest in this kind of market where there's lots of better names that are actionable.
And look at this pattern. There's so much overhead in that pattern. It's hard to say. So it's not something we'd be looking at all. Bless you there, Dr. K. Data or Splunk as a bottom fishing. Well, you see any pocket pivots in here that you're going to buy? They're trying to turn off their lows, but you look at data. It's got a lot of overhead on the left side. I almost think this thing's going to form a right shoulder and die. So I'm not really excited about that one. I don't know how big of a stock it is either. Workday's been a little better because it's trying to come up. If there was going to be if this was going to be a right shoulder, then I guess it would stop somewhere underneath this peak on the left. This is probably a left shoulder. But if it was going to be a right shoulder, it'd probably stop somewhere. So it's working its way up. You've got some big volume right here on the weekly, so that's right at the lows. And I've seen a lot of constructive cups where you do see that big buying volume right at the lows. So somebody liked it. Undercut this low here, see that? And came down and turned. So it's kind of washed out, and that's why it's turning. But you do have, let's see, you see any pocket pivots here that you liked? I don't see any pocket pivots in here.
None that
No, so there has.
I would act on.
Yeah, I mean, it's. I think it's like a lot of patterns, though. If it was a big stock before, earlier in the year, and it corrected in March with the rest of the market and got hit really badly, I think everything's just trying to come up now. So just a general wait, I'm sure the ETFs are doing great. So I'm looking at Yelp is down 7 cents trying to turn. So, and I'd like to see all of my stocks I went in heavy on this morning into my core positions. So I'd like to see them all turn green. We'll see if that happens. Somebody says, thank you guys. You're welcome. Let's see. We still got 15 minutes. Any more questions here? Do I have any other exciting stocks to talk about? GMCR, Green Mountain is moving. We were talking about this on the chat room. You got to buy these things when they're coming in my view. And GMCR has been the same way. He had this big cup with handle breakout, and it goes right back into the 10-day. Could have bought it right there. Runs out of there. Actually runs out here. Pulls back to the 10-day once, and then zoom, takes off again. And pulls back to the 10-day and trying to come out again. So a lot of these stocks, I think, the way you have to buy them, especially this one, is that way. The only problem is, Green Mountain's kind of an old name, and I think what it's trading on right now is the idea that Coca-Cola is going to continue to buy their stock and eventually take them over. I don't know. Do you know anything about this stock, Dr. K? Does this one thrill you? Green Mountain or Keurig?
Yeah, it hasn't really. Compared to the old one it had. It's had some gap ups in the pattern on earnings, and it's getting tight in the pattern. So it's on a technical level, it's constructive, but I'm showing earnings and sales aren't looking particularly interesting to me, and the stock has had a huge run prior. And what I've noticed is stocks like this, they're like Ascend. Ascend back in 94, 95, they make huge runs, and they're all-star stock for 2 years, and they're 10-baggers. They go up more than tenfold. But then when they have their huge correction, that usually is the end of the run. And I can't help but think that that's what's going to happen here with GMCR. In fact, it looks a little bit like the Ascend base that formed after its massive run-up, where it comes all the way back up to the top to hit new highs, and then in Ascend's case, that was it. That was the end of it. That was the ultimate top in the stock. And again, since I don't like I'm not real crazy about the earnings and sales going forward. There's no real catalyst to push me into buying this stock at these levels.
Okay. Nobody wants to hear that, so I think a lot of people are.
Yeah, technically it looks fantastic, and again, if you want to take a small position, there's nothing wrong with that. Because even if this is the ultimate top, that doesn't mean it won't top in 10% or 20% gains from now. You might be able to make a little bit on the stock because its technicals are very good.
Okay. Anyways,
it's just not my thing. Not with this market. There's a lot of good stocks out there.
What's A10? A10 Networks, cheap stock. I guess you could say it had a. Is that a pocket pivot there or right there? I don't know. Maybe that is.
Not quite.
No, I don't know. Cheap stocks, junky stocks. When I first showed up at O'Neill, Bill used to basically yell at me about. He'd tell me, stop falling in love with teenage stocks. I still, you see an Organovo at $8, it starts going. Sometimes it gets gets your blood going, and I'm dumb enough to buy it. But I think O'Neill was right. He used to yell at me. I was talking about this in the chat room earlier. He used to yell at me, you don't want to buy the $10 stock that you think might go to 15. You want to buy the $70 stock that's going to 700, or 300 or 400. And he's right. And you look at the stocks that really move and sustain moves, they tend to be higher priced. So I do think there's still that old rule of higher price, or as Livermore would say, the leading issues of the day. I would say that those are identified by the higher price, and higher price means higher quality. So,
the thing with the 90s and even the 80s is that, and I agree with his premise here on quality is indicative of a higher price. But the 80s and 90s were such a beautiful time,
right.
that you could actually, I loved the lower priced, lower cap. The small cap stocks. Partly is that the small caps are doing very well, and the market was very forgiving. And if you hit the right one, you would make more money in the same amount of time compared to a higher price stock. Let's say an $80 stock compared to a $16 stock. And I did quite well trading in that fashion. I would say that once your account gets large enough, though, then you are wasting your time piddling around with the lower priced names. But at the time, when if your account is smaller and you're in a small cap environment and you're in a 1990 situation, and that could happen, who knows, 15 years from now, whatever. There might not be anything wrong with putting some money into a lower priced name. Again, provided the fundamentals measure up and it potentially has leadership qualities.
And this one is, let's see, what do the numbers look like? Well, I think the one case where a teenage stock is acceptable is if it's a recent IPO, which this one is. But I don't know. Maybe it starts to strengthen. One of the signs would be it's only trading 337,000 shares a day. So one of the signs of it getting a bigger institutional following would be an increase in that volume to like a million shares. So that's the one thing that would bother me also with that. So anyways, how do you treat pocket pivots on option expiration days? No different than any other. So I know volume can be exaggerated, but I found that there's no reason to differentiate them. You can buy them, and if they don't work, you can sell them. Oh, here you go, Dr. K. Don't you like go-go here? What's wrong with you?
Let's see, go-go.
Is go-go a no-no?
Yeah, I mean, it had a gap down earlier. I don't know, the earning. It's just it's got resistance above at the 200-day. It's not something that I would ever have my eye on until it really proves out, and starts to sort out these technical issues it's having.
Look at the weekly chart. You're basically rallying into this area of resistance here. It used to be support, and stock broke down through it. So I don't see it getting through. I wouldn't waste my time with this. And it's the other one that you look at, and it's just trying to come off the lows. But there's not really anything going. My view is this: if you're looking for bottom fishing pocket pivots, it might be too late. The best ones occur as the market turns because they're moving with the market and turning with the market. Everything that's coming up later, I think your odds of success decline because in many ways, like the 3D printers, for example, they're just coming up with the market. The market's up, and everything's getting pushed up with the market. So, they're just rising with the tide, and so they're not really leading the tide in. You know what I mean? So that's something to think about. So the stocks, O'Neill, you saw was telling me when you start the first leg up, the leaders right at the start of that leg are where you want to go. You'll go through a correction. They'll wash out some of the old leaders. They might top temporarily. A new set of leaders shows up on the second leg up, and those new leaders are where you want to focus, and they're usually the first ones to get going. Somebody says, even knowing that stocks tell us what to do, it seems they don't care about what's going on in Iraq. They don't. That's my perception. And there's plenty of reasons for the market to be nervous here. I mean, you got, I don't know, what was going on yesterday? Ukrainians on the east side of the Ukraine are trying to get into Russia and get out of Ukraine, and they feel that their leader has betrayed them. I'm sure that the media took a scientific poll on that one and blah, blah, blah. And the market started to come off yesterday, I think, on that news, and then it closed basically flat. And today, what's going on in Iraq today? I don't even watch the news, to tell you the truth. I just watch the market. You watch the news, probably just shake you out. And if your stocks are going to force you to sell, let them force you to sell, okay? And that's pretty much it, Otherwise, don't get bogged down with the news or worrying about the news. So somebody says Coca-Cola owns a big percent of GMCR may provide a floor. That's a possibility. EMES, I don't know. Do you like that, Dr. K, with that big gap up off the peak? No.
The gap down, you mean?
Or gap down, yeah.
Yeah, that's not looking just to be avoided or shorted.
Oh, let's short it. Short it. You heard it from Dr. K. Short it. Use a 10-day as your stop at 104.45 for those of you who just have to get short this market. Let's see. I was going to expound on the solars because I get a lot of questions. I know on the chat room, this one makes me think of Tweety Bird. I don't know why. Gee, I thought I saw a putty tat, G-tat. They've supposedly got some interesting technology, losing money hand over fist. Maybe did Obama give them a $500 million loan or something? Isn't that what qualifies? You got to be losing money hand over fist with no hopes of profits anytime soon. I don't really see anything here. Is there anything here that excite you, Dr. K?
No, not at the moment. I've looked at this one, and yeah, so
No.
far there's.
You go with the leader. Which is the leader? Which is the leader in the group, Dr. K? This is a quiz.
Hold on, I'm still waiting for this to load. Somehow my Wanda has decided
Yeah,
to freeze.
mine too. So, oh, they do that on purpose.
So they must have a problem down at the
we go.
OK Corral, I guess. Oh, there we go.
Interesting, we're having the same problem at the same time. And these guys are going to make 8 cents this year. Then next year, 78. The year after that, $1.57, according to the first call numbers. You know, okay. You know.
Yeah. No, but I mean, in this group, you know, SunPower has been really good. SPWR.
First Solar.
You know, market cap wise, FSLR is the leader, but SPWR is doing better on a technical level.
Right.
And you know, you've got Elon Musk's company, which is trying to get going, but has a lot of stops and starts in the pattern. But I'm keeping an eye on that one as well.
Trying to come up, yeah. I mean, if you look at it here, it rounded out a base. It's actually a nice looking roundabout here. It came up pretty fast off the low, so my guess is you're going to see it back and fill. See what happens when earnings come out. I'm watching Yelp now turning green. Twitter down 36 cents. That's trying to come back. BRNT, this is an interesting name. You have Bible Gap up here, but then and it was holding up very well, but then the company announced a 5 million share offering here. I think there was also like 300 million in convertible debt as well. You notice a lot of companies have been issuing convertible debt lately. Palo Alto Networks did. They may be thinking that interest rates are going to rise, so they want to lock in their borrowing now. That's what I've been thinking, which is good for gold. So and commodities. Is that right? That's right, Dr. K? Rising interest rates are good for gold and commodities, yes or no?
Yeah, you have rising interest rates, so you have a strengthening dollar, and you know, if the dollar's strong, then that's good for gold. Rising interest rates also indicative of potentially higher inflation. So, of course, that's good for commodities and precious metals.
Right. Verint is in the same group as Palo Alto Networks. I don't think they do the exact same thing, but they're in the same group. Security and what is that? What is that group? It's slow again. Anyways. Whatever the case, stock's holding along the 10-day. So they priced the offering here on this day. That to me was a pocket pivot. Could have been bought right there on the next day on the pullback, and it's just kind of edging up. But I think what's happening here is that you've got volume drawing up today, negative 41% below average right now for this time of the day. So you got volume drawing up on the pullback, and it's getting close to the 20-day, and it's hovering around the 10-day. So my guess is you're going to see some sort of pocket pivot when it finally comes out. Or you could buy it here, you know, with the idea that it should continue to hold, I would say, the 48 level, which is really the top of this. If you look at the formation here, that's where you have some support along here, and it seems to extend along into here. So that's how I would look at this. But it's a smaller name, so you know, it's not something. I've looked at this, and I bought a little bit, made a little money on a trade from here to here. But after watching a trade, it's too thin for me. I want to be able to have something liquid enough I can buy, you know, 20,000 shares very quickly of if I want to. But I think it's still digesting, as the person who asks about it says. So. Let's see. Next question. Fey, F-E-Y-E. Another one I think that's just coming up with the market. So nothing really thrills me. This one I think is more of a direct competitor of Palo Alto Networks. So if you have this stock, if you see this chart, and you see this chart, which one do you want to own? So Common Sense Investing 101. So I'll go with Palo Alto Networks. Forget FireEye. Any other questions? We're right at 10 o'clock, so that's pretty much it. I'm sitting. I've gotten to a point now where I have very nice cushion. I'm up. I'm pushing up into upper middle double digits right now. I can pull back. 10-15% very quickly if because of the concentrated positions, which is something I accept entirely. But it helps to have a nice cushion like that, and I've kind of worked my way into some good core positions that I'm working around. So, I can go back and forth a lot before I settle on what I like as core positions, and those are things like SunPower, like Palo Alto Networks. I think Yelp, I think Twitter looks pretty good. JD is another one I like. It was right at the 10-day the other day, and it came off. No pocket pivot, and you're going to get some resistance from this side of this little V, but this thing could take off. Someone in the chat room today mentioned that they're probably, or they are coming off of the quiet period after the IPO next week. So that's a possibility that could drive the stock higher. So you're seeing other names. What is Wooba? Is Wooba, which is going nuts, is that another retailer one, or is that Vips? Whoops. Dr. K, do you know these names? Retail Internet. Yeah, that's a Chinese Internet retail stock. Wooba, and that's on fire. What's the other one? Vips is doing okay. Yeah. JD is in that same group. So they're all of those are acting well. So I would expect that JD.com would cruise. I own it, so I bought it off the 10-day just a few days ago. But right now I don't think it's marginal, so I just have a small position. About I don't know. I got to check 5,000 shares, something like that. Nothing major for me at least. But we'll see how this goes. When it becomes marginal, maybe it'll become more playable. There goes Yelp starting to push up 50 cents. So last couple of questions before we sign off. CMG is a lot like Netflix, hanging along the 10-day now. Maybe it forms a cup and a handle and breaks out. One thing to keep in mind, I think, is I always like to have a strategy on the short side ready to implement if I think the market is getting into trouble. Right now, I don't see that. And wherever I've tested the short side, if I've been quick and take a couple, $3 on a stock on the short side when the market pulls down, I can make some money. But in terms of finding something less tactical and more of a strategic kind of short, there's nothing there. But you watch some of these patterns. If the market gets into trouble, some of these could be pods. So this could be a pod. Okay, Netflix could be a pod, a punch bowl of death, because of the deep thing. So these could set up that way. So you kind of have to keep an eye on them. I'm looking at Amazon as another one. Excuse me. Found resistance on the rally up to the neckline of the prior Head and Shoulders. See how it comes right up into the 340 level, finds resistance there. It's backing down. It could continue higher or build a base, if the market continues higher. So I'm not saying that you come after now, but you can see some of these setting up. Pandora, P is for pounded. This might be a bigger Head and Shoulders, so you're making a right shoulder. That's another one I'm keeping an eye on. A lot of these stocks, and even things like Data and Workday, to me, these, like I was pointing out on Data, this could just be a right shoulder. So these are on my watch list as short sale targets if, for some reason, the market starts to falter, which right now I don't see it. And I'm not going to try and short these things with the idea of making big money on the short side right now, because that's just not where the market trend is. That's not the least line of least resistance right now. That can change, but that's really where you're at right now. HZNP, again, this is a stock that's, we talked about this before. You get pocket pivots in here, and here. I think there's another one here. So bonk, bonk, bonk on the way up. It trends higher, but it's stair-stepping. The best way to buy this is on weakness. End of story. Otherwise, it's acting okay. It's not coming apart. A lot of the biotechs look good. We had somebody email us last night, I guess. They were panicked, I guess, because they noticed that the price of Celgene had gone down by 1/2. And I guess they didn't understand that it was a stock split. And when a stock splits, it doesn't mean that your broker takes half your money away from you and cuts the price of your shares in half. It means you get twice as many shares at half the price. So I just want to make that one clear to anyone out there who's not familiar with it. But, I felt badly for someone. If you're a new investor and you buy a stock, and if you bought Celgene on one of our pocket pivot calls down in here, you're up on it pretty nicely. You got to be happy, and then you've never experienced a split. You don't really know how it works, and you see that happen. Yeah, you can have a heart attack. So I don't want anybody doing that. So anyways, just keep that in mind for anybody out there who might be a new investor. But on that note, we'll see how the market finishes out the week here. We got three more hours left in the trading day, a little less than halfway. left. More we're through the day, more than halfway. But the pattern has been to open down and either close up or close nearly unchanged, and that's constructive. So I think as long as we continue to see that pattern, we're fine. Any last parting words of wisdom, Dr. K?
No, I'm all good here. Let's just stay the course.
Yeah, so for now, stay the course, everybody, and thank you for showing up as always, and we'll catch you guys next time. Take care. Have a good,
So long,
day.
everyone.
Have a great weekend.